The hearing will begin. This is a hearing of the Financial Services Committee with the members of the Presidential Working Group, which I guess is about 20 years old. It is part of a series of hearings we're having on the issue of hedge funds and private equity, the increase in the amount of financial activity that goes through. We had a hearing earlier with some of the representatives of hedge funds themselves. We will continue to deal with this, and we are pleased to have the Presidential Working Group before us. I think, as I read the testimony, we have a kind of uneasy consensus that there is a potential problem here that we wish we were more sure about how to approach. For instance, read with great interest the speech by Assistant Secretary Ryan of the Treasury a couple weeks ago. And I don't think anybody can be confident that all's entirely well here, but neither is there any obvious thing we ought to be doing. This is a matter for concern. It is an interesting issue in that it's a challenge to our regulatory system, both within the U.S. and internationally. I mean, the fact that we have a wide range of entities here. We have two quasi-independent commissions. We have the Treasury and the Federal Reserve, all with pieces of this. We have, obviously, a very important interface with the international community. And I think I know that people don't generally believe this, but it is the case that sometimes, not often, I acknowledge, but sometimes congressional committees have hearings because they want to know things. It's not the norm, but it is today. This is a subject of great importance and considerable uncertainty. There is obvious value to the activity of these entities. The market is not irrational. People profit because they are doing things that are ultimately beneficial. But there are also potential dangers. In particular, from this committee standpoint, I think, not all of us, but most of us, it's the potential of systemic risk. We are not here largely in an investor protection capacity, particularly after what the SEC has done. We are not talking about small investors. There's one exception to that. There is a great deal of concern about the potential for pension funds to get involved beyond what they should be doing. And I've talked to the chairman of the Committee on Education and Labor, Mr. Miller, who has jurisdiction there. We are going to be working at one of the things we have to address is whether or not there should be some special rules regarding pension funds. But beyond that, the question is systemic risk. The question is whether, given the proliferation of forms of investment that have high leverage, whether or not if there is a rapid change in the basic financial environment, people will be able to deal with the consequences. So far, there have been some good signs. The Amaranth situation was a problem for people for whom it should have been a problem, but it did not have broader systemic problems. It does not appear now, but be interested in people's view, that the Bear Stearns issue is going to be something that causes broader problems. But those have happened within a stable financial context. The question, I guess, is what happens if the current financial context regarding international liquidity and interest rates were to change, and I don't think anyone thinks that that's going to remain forever in both contexts. So what we are talking about is, are we now ready to deal with a potential problem, and if so, what should we be able to do about it, and how do we get ready to do that without causing some damage? So as I said, I regard this as a study that's ongoing, and I'm glad to say that it's been a collaborative one between the Congress and the various regulators, and it's good to see them working together on this. And as I said, we are here to to learn some things and to talk about things in general, and this is part of a continuing inquiry into this problem, which is we have quantitatively, and as Mark said, changes in quantity can become changes in quality. We have what could be a qualitative change in the extent to which investment is carried on. Our question is, does that pose potential problems, and is the regulatory structure adequate to this new set of issues? And that's what we will be dealing with. And I'll now recognize for 5 minutes the ranking member of the committee, the gentleman from Alabama.